In this video, I've got 13 tips on how to set up technical analysis when trading cryptocurrency. Each of the 13 tips is listed as a timestamp in the description below. First tip is to get set up on a professional trading system. I use Bybit, Binance, KuCoin, and some others. I'll list all of them in the description below. You need a system that has the professional tools to get set up with TA. So you need all of this right here. The platforms that I use have these. Obviously, they're free to download and use. They charge trading commissions. They do have some deposit bonuses as well. Also, if you want the best free tool, I recommend TradingView. This is completely free. There is a paid version, a pro version, but you don't need it. Most of the best stuff is for free. So I'll leave that linked in the description as well. The second tip is to get set up using candlestick charts. You just cannot trade without some form of the candlestick. This line chart is often used on amateur software and it doesn't give you any information that you need when trading. Come over to the top of any pro software, come over here and then choose candles, as you can see. I now have candles on the chart and they're color coded, green for up, red for down. The reason why we need this is because it gives us more information. A candlestick gives you 4 bits of information. It gives you the opening price and then it gives you a low price like this. So this is where the price went. And let's say the price went up here and then it came back down and closed right here. We now have an opening price and a closing price. And because the closing price is above the opening price, we can color the candlestick in green. This is a bullish candlestick because the close is above the open. We obviously get the high and low as well. So this is a high and this is a low. That gives us a lot of information that we can use. These are plotted over time, and there are also some more specific trading techniques that you can use with these. I'm not going to go through them in this video because this is supposed to be a very short video. I have a lot of the different techniques and the options listed as videos in the crypto trading course. I'll leave that linked in the description. It goes into much more detailed analysis of all of these different types of patterns and how to trade them and everything, as you can see here. But for now, we'll just say that candlesticks are absolutely a better option than a line chart. The next tip is to choose the time scale of the candlesticks. This is going to depend on whether you're a longer term trader or whether you're trying to day trade. Come over to the chart and then choose the time scale that you want. I'm on a day chart right here. This means each candlestick is 1 day in length, 1 trading day. But if I'm a day trader and I'm looking to get in and out within 1 day, this is not going to give me the information I need. It's too broad and I need to get more specific. So I can come over to a 30-minute chart, for example, and you can see you can right click and then choose reset chart and it gives you this option. I can get even more in depth with a 5-minute chart. Each candle is now a 5-minute period of time. You can see just how different they are. This is the 5-minute chart, and what you can actually see is an uptrend occurring right here. This is going to give me a lot more detail to trade rather than the day chart, which you can see is telling me that we are in a downtrend. So you can be in a longer term downtrend, but short term, you can actually be in an uptrend. The type of trader that you are and that you want to be, that will dictate which time scale that you want to use. Longer term, you can go for a day chart. If you're day trading or want to trade over a couple of days, 5 to 30 minutes is going to be a better choice. The next tip is to get the volume chart on your trading system. This is really important. Professional traders will use volume plus price to tell them where the market is. Come up to your indicators and then type in volume, get that on your chart right here. Click volume, it will come down on the bottom. What I can see is that there are periods of higher volume and lower volume down at the bottom right here. This is a period of higher volume and trade, and you can see it's a sell-off. Then we have a kind of consolidation in the price. There's no trading volume right here, but when the volume reappears, it's to the downside as well. Then we're having a consolidation in the chart and no volume. This indicates to me that we're in a downtrend. Pretty easy to sell to kind of tell that because of the price, but what I'm seeing here is that when traders do appear, they are actually selling off. So these periods of consolidation are not a time to go long, but you wait for the volume to come in. You can see the price is falling off. So these are actually areas where you can short and expect to buy back later at a lower price rather than go long, because the volume is not here. That's when we consolidate. When the volume comes in, that is when we sell off. So again, right here, I'd be looking to actually go short, because when the volume comes back in, it's going to be to the downside again if we continue the downtrend. The next thing to do is use moving averages. Moving averages allow you to plot a line on the graph that is a smoothed out line of the actual prices that the asset trades at. So a moving average, for example, a 5-day moving average, would take the price of each day 5 times over, like this, and then divide them by the amount of days, which is 5 days, and it would plot that on the graph. Let's say the price was 51. The next day, what would happen is that the furthest day out in history would get X'd out, and then you would put another one in like this, and then that average would be placed on as a time period, let's say 51.5, and so on like this, giving you an average price that can be plotted over time like this. If we see it on the chart, you can see I've got 2 moving averages here. I have a 50 period and a 200 period moving average. Obviously the 50 period is 55-minute periods because I'm on the 5-minute chart, and it's 200 5-minute periods because I'm on the 5-minute chart. You can see them here. What you can see is that the yellow is the shorter and the blue is the longer, the 200 period moving average. What we can also see during this downtrend is that whenever the price consolidates and you get this kind of leveling off of the shorter period moving average, it then kind of reaches a point where it gets sold off again. This is clearly a downtrend. So what I do here, looking at the moving average, is we see actually a bullish crossover right here because the shorter term trend is to the upside, but the longer term trend is definitely to the downside because the price is trading underneath this longer period moving average. This is a potential crossover right here, which is potentially quite bullish because when you get a crossover, it means that short-term traders are actually coming in and so could push the price higher. However, this longer term trend obviously means that we could potentially once more just reach this price and then sell off again. That's a decision you have to make as a trader, but seeing the moving averages can teach us a lot. If the price is trading underneath a long-term moving average, it tells us generally that we are in a downtrend overall. Of course, you can break out of them, but usually you trade with the trend, and as a percentage, you're going to get it right most of the time, more often than trading against the longer-term trend. We can use moving averages to also show us where support and resistance are. Support specifically is when you're in an uptrend and it's a line where the price will come back to and bounce from to move further into the uptrend. Support is always below the price. So we can see the price obviously by the candles, and this is support right here, funnily enough, which is the 200 period moving average. So you can see that generally the price has bounced off of these levels and moved higher into an uptrend. The price comes back down and it actually reaches this 200 period moving average and then bounces off again into an uptrend. When you think you're in an uptrend, what you do is use the support as an area to purchase, and then when you bounce off of that support, that is when you sell into strength. If you're a short-term trader, of course, longer term, you may just buy at these areas and then hold and then buy some more when we reach support again. Resistance occurs in a downtrend. It's when the price tries to move up, but it can't move up and gets rejected. Resistance is always above the price. So we can see definitely resistance right here in a downtrend from here all the way down. This is definitely resistance at these levels. So if you were going to go short and trade futures, you would always sell and go short at these levels and then buy back when you start moving up again. This is all resistance, as you can see. This is typical of a downtrend. You just short this all the time and actually buy back your shorts when you get rejected off of these highs. Support and resistance can also be drawn horizontally on the chart with things that I call areas of value. It's really important when a chart isn't trending to actually draw these on. Why have I got 3 lines here? Well, you can see key areas in the chart. So if you can see on the chart, you have a very key area of support right here, and that's actually repeated a couple of times over here. This is a key area for me, and so I draw a line from this area of support all the way over to further out for the chart because I want to try and predict these prices. You can see this level is 30,000. This is obviously a key area of trade. It's a round number as well. You can also see definite areas of support right here that actually turn into support and actually turn into resistance, and then again turn into resistance 3 times here. This is a key area and a key price. This is 45,000. So that is a line I draw on the chart. So you can do this at very large areas of value where you see where the key trade is. And then if you go deeper in, you can also draw further lines. For example, this line here would be drawn, but it gives you key areas, support and resistance levels on the chart where you say, if I'm predicting a downtrend here, I think the price will move down to this price. And so that will obviously help you when entering your orders. If you want to go short, you can short with a price down here that you want to take profit. Or if you think we're in an uptrend, you will see this price as something that the price may break through. And then you can see the next level around here where support and resistance is. So if you were to go long here, then you'd be looking at here to take profits. Short-term trading, this one, obviously, if you're a long-term investor, you just kind of buy and hold and wait for further big moves over time. The price will move more over longer periods of time and less over shorter periods of time. Next tip is to find chart patterns. These can tell you where the chart will go in the future. A double top and a double bottom are probably the easiest to get your head around. A double top is when the price reaches a top and a high twice. The reason why this is a bearish move, as you can see, the price actually reached a high, it got rejected, and it reached the high again, and it got rejected. This means that there are no more buyers. Buyers are exhausted and they're getting rejected at this price. This is a bearish move suggesting the price will move down, and that's exactly what happened. Can we find a double top again? Yes, we can. You can see the price moved up quite violently here, but we got a top and a rejection. We got another, bullish move, but we got a rejection again here, meaning the price will probably go lower, and that's exactly what happened. We can see another double top right here. This a very strong move to the upside, but the move has run out of steam. The price gets rejected. Bulls think we're just in a pullback, and so they buy the dip, but that price gets rejected again, and so you get this monumental fallback. Double tops indicate a reversal of an uptrend, and that's when you should be wary, potentially to go short as well and benefit from a down move. Just the opposite to a double top, though, is a double bottom. That's when sellers are getting exhausted, and you can definitely see that on the exact same chart. This is a sell-off here with a bottom. Buyers come in, they get sold off again, but you can see it actually, at exactly the same price, bottoms out. This means that sellers are getting exhausted and cannot push the price any lower, and so you get a nice rise. So with double bottoms and double tops, it indicates a reversal. You can trade both of these. It's extremely difficult, or you can only be one type of trader. So you only go bull or you only go bear. Switching can lead to a lot of indecision, but whichever one you are, you want to watch out for a double top and a double bottom to indicate a reversal of a trend. Next tip when using TA is to find your price targets. Like I said just earlier in the video, if you're using support and resistance levels, these will be your price targets. Find key areas of value on the chart. So definitely I've drawn this blue line. You can see it's an area of support. We get sold off, but that gets rejected. We get sold off, but it gets rejected. We're getting sold off again. So your area of value or your price level would obviously be looking to come and revisit this line again. You can see we're trading within this range. So you can definitely see we're just getting rejected off of these highs, and then we're getting support at these lows. All you have to do essentially is just buy at these lows and then go long to get the reversion back up to this high again. Where is your price target? When you trade, especially day trading, which this video is about, you need to have your price target. If you're going long here, your price target should almost certainly be up around these levels where you are seeing the resistance come in, because this is a day trade and you're just trading this. So your price level for a take profit would be around about 44,500, something like that, 45,000 at the top. Obviously, if you're going long here, if you were to go short at these high levels and go short, you're obviously looking at some sort of area around here. I would never do it at the exact level because it often doesn't trade there. You can see this sell-off missed, and so did this one. So I'd always place it a little bit above the actual level so that you can basically short, take your profits, run, and then see how the next cycle moves. The next tip is not very specific, but it really is the most important thing for me, I think, and that is trying to predict where the market is in comparison to where the reality will be. That sounds kind of weird, but this is really important, and it's not a specific practical gift that I can give you of trading. What I'm talking about is the market, as you can see here, is a prediction mechanism. That's all it is. The market price of any asset, this particular asset is Bitcoin. You can see it's currently trading at around 40,000, 39,000. This price right now does not represent the current fair value of Bitcoin. It represents what the market thinks Bitcoin is going to be worth in 6 months' time. The reason is because the market is a predictor of the future. Everyone is trying to predict where the price will go. So there are many things to consider. How is the economy doing? Are central banks easing monetary policy or tightening monetary policy? Are they doing that now? But do you actually think that the market has overreacted to what's happened in the real world? Do you think the market doesn't know what has actually happened, or are they predicting it very well? The absolute massive thing in trading is trying to second guess the market. Are the market accurately predicting what will happen in the future, or do you think they've got the price wrong? This is really difficult to predict, and unfortunately, technical analysis cannot do that. Technical analysis is just one part of the equation. You need to also analyze the macroeconomy and everything like that. I can't give you a specific tip about that in this video, but I would suggest subscribing to the channel, because I do update videos on these things, what I'm thinking at the time. And of course, come and join the Discord group as well. I'll link that in the description and as a pinned comment. The next tip, once you've got everything set up with your technical analysis, is to use a specific trading strategy. I'm going to show you one very quickly here. It would be known as the moving average strategy, which is essentially when you use two different moving averages together and you try and trade around that. You can see we are in an uptrend right here, so you have to get that first. But what you would do is trend reversions to this level. So essentially when the 50 period moving average in yellow converges down to this blue, that is when you go long and you just sell on a rip. Then when you can see down kind of here again, when the yellow moves into the blue, that's when you'd go and buy. This occasion, you kind of really wouldn't do much. You may actually lose money here, or at least break even. Then again, you would come and buy when the price falls down, considering we're still in an uptrend, when the yellow moves back into the blue, and then obviously sell on the rip. This is fairly difficult, and of course, when you day trade, you are not going to get it right every time, but the whole point is to essentially have a winning percentage of trades. As long as you win more than half of your trades, then you're going to do okay, as long as you have some take profits and some stop losses in place. I can't go through that in this video. I go through some specific strategies in my crypto investor course. I'll leave that link in the description if you need that. But I also have some longer videos and specific trading strategy videos linked in the description as well for free if you want to watch those. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.